Hey guys, good morning. Eagle Trading checking in. I want to kind of take the morning video in a little bit of a different direction this morning. Kind of made myself some notes this morning, and I want to look and I'll show you what I'm talking about here and just kind of read it out loud here, I guess. First of all, I like what I'm seeing. Obviously, we don't want to see wealth destruction. We don't want to see people's 401ks get destroyed. But I got to be honest with you, some of the moves in the market almost look artificial. And I'm not saying that the market is completely manipulated, but I'm saying that the right amount of firepower at the right points can definitely control the outcome of algorithms. So obviously, going into Friday evening, you could see the pivot, the wedge starting to form and tighten on all the indices. And if you push a little bit at that point right there, and you kind of push things overnight, and you juice up those futures, I mean, you can definitely cause that next algorithm to trip to the upside. Just unusual movements. And the reason I say that comes to point number two is this is pretty much the biggest disparity I've ever seen between Wall Street and Main Street in all the years I've been trading. I get it. The market's a future discounting mechanism. It's always trying to anticipate, a few months out, not years, usually not weeks. For trading purposes, yes, weeks, but bigger movements are usually anticipating months out. So maybe the market sees something we don't see. The market tends to be right over the long term, but we really haven't seen the long term pan out here yet. And I'll get to the charts later and explain why. And I've always thought markets have had some type of an outside influence, especially when you see some of the wild swings that we've seen recently. Like I said, I think you can control those algorithms if you can kind of hit at the right spot. Different Fibonacci retracements. We're all looking at the same thing, so you nail it just right, you can definitely move the markets. That being said, you can kind of say, well, then where were the market controlling guys when it was plunging from 339 to 221? I don't think the market can be controlled in certain specific instances, because I think the market has a lot more power if there is somebody manipulating the market, quote unquote manipulating. You have to hit it at the right points. You can't control, massive downdrafts or redemptions, or once the algorithms start kicking in one direction excessively because of an exogenous event, white swan, black swan, whatever you want to call it. It seems to be more at pivotal points where the market seems a little bit more controlled and a little bit more easy to influence as far as the volume is concerned. So my fifth point was the QQQ never broke its long-term trend line. So, we talked about the market having to capitulate. The generals would have to crumble before the long-term low was in, and we never got that in the Qs. So now I have to look at the Qs to dictate the direction of the market, and you can see the QQQs, and I'll show you in the chart, never broke its long-term trend line. So now maybe we watch the Qs. And then the final thing is, if you guys got my email from the CEO, you know who the CEO is now. It's the CEO of Walmart. I commented that I didn't think that the 1929 scenario could play out here. And that was last week, basically because the market structure and psychology of the participants is different. I guess we take that to a whole new level now. So here we have the the Dow Jones Industrial Average, and I'll tell you about what I'm looking at here, and I'll go further back, and we'll kind of keep this short because we want to get to the market. But the reason I drew the top of this channel here, the top of these candles here, is because this is the big directional move that we had. It's the last high area that we had before we broke down this other longer term channel. So I thought that was a very important inflection point on the technical analysis. And if you run a channel top all the way across here, you'll see that we kind of meet up here. So yeah, I think it has some validity there. That being said, if we run a channel line from some other pivots and we go through some directional changes in the market, break down here, kind of waffle around there, retest, break down, push through, retest along the line, you get the idea. Once again, we're not looking for perfection here. This is a little bit of a different line that we're drawing here. We're looking for directional changes, and you'll see that kind of lines up where we're at in present day and tags the bottom of this candle again. And then you have what we're going to call the February area epicenter of where we're going to draw all of our charts from, and that's the shorter time frame. And if you go from that date to this line in here, and then we have a little bit of wiggle room to go. This is the one that we drew on the QQQ. This is the line we drew on the QQQ as well. And the QQQ is actually above this line. It's the only index of all of the indices that's above that line. In fact, if we go to the QQQ and we look at the same chart, very simple. February, low there, low there. never broke it. In fact, if we go inside the QQQ and look a little bit closer, you can see the channel markers are now starting to play out. Where we had the break along here in the line, I don't like to do the top here because this is just fluff. We want to see where we bounce to. And then you come across here, failure, pull back, close right on the line, and then you pop. We created this little wedge in here, this little bull flag in here. Here's your bear trap. Fall below, retest, and then you kind of regain. You get the idea. So we're probably bouncing up on this line this morning. I haven't even looked yet. I think that puts us on today, which would be right around 201, 202 in this area. Let's see, today is the 7th. Let's see where the 7th puts us. We're just above this channel marker line here, kind of pushing a little bit through it, right around 201. So that puts us to the top of this candle. Yep, the top of this candle is 275. So we're getting into this candle right here, which is also interesting as well too, because when you think about it, this is the closing candle before the big downdraft. So this is what we talked about, is there going to be a lot of overhead supply at 204.50 on QQQ and oversupply in SPY at this lower candle. Obviously Qs are stronger. This is the candle that I think SPY is going to have to overcome, but we'll get into that later. Anyway, you get the idea. Longer term was never broken on QQQ. And let's look at the IWM now, which is the complete disaster. So is IWM Main Street and QQQ is Wall Street? Because here's the IWM from the same pivot point of February 2nd, or mid-February of 2015. We even had to draw the line a little bit higher, because if we go from this line all the way up into this area here, we're not even close. I mean, we're so far below all of these lines that I drew, and this one goes further back longer term, and we still are below that one as well. So if the IWM small caps are indicative of the broader market, this is the Russell basically 2000. You know, you have completely a market that's really completely diverted from itself, and that's probably not a good thing longer term. But it tells you where the money's going. The money's definitely going to the QQQ. And let's look at some other stuff real quick here as well. And we'll get this out of the way. Carnival Cruise Lines. Trying to figure out where Carnival can go this morning. And I think you do have a trend line reversal on Carnival that brings us up into the 13s. We're at 1207, but you know, of all the FOMO stocks, if people feel like they've missed out on all these different stocks that have already run, where are they going to look for, you know, if they think the world is back to normal, where are they going to look for some firepower here and some alpha? And they're going to look to CCL, Carnival Cruise Lines. There was news overnight too as well that the Saudis have invested a pretty decent amount. I think they got in about 8% of it, so that's a good positive thought process there, that they might have some backing to keep the company from going insolvent, especially if they're going to be keeping their ships stocked for the next few months, and they're burning $1 billion of cash a month. So that's at least a positive. So I think you're going to see a little bit of retrace and we're still positive on the MACD. We're below the zero line, but we do have a crossover here. Even though we made lower lows, so we're pushing higher there. Looks like we can bang this trend line up here in at least 1285 today would be my target, 1285. So let's see how that plays out, and let me know what you guys think about the commentary about the market. It's just kind of insane, the stuff that you see. Looking for a 280 retrace on SPY, and I'll kind of show you where we're looking at now. We're kind of looking at a channel directional change there, so we could pop up into this area here in the 280s inside these candles. But this is the candle that I was talking about. This is the close, and then we gapped down the next day. And you can see here's the close on the candle. This is where the Qs are at. Remember up here, obviously it's stronger on a comparative basis. Relative basis, Q is the strongest. Here's the candle where we closed at. and then the next morning you open all the way down here, you try to rally back up into the middle of the candle, and then you fail and close the low. And so a lot of people stranded in this area. And let's see, we're already above that. The high on this candle was 271.48. Let's see if it kind of trends back down to the 271.48 area intraday. So we'd probably call that if we're going to get up into this consolidation, which puts us back to the Fibonacci 280 area that we're looking at on the 50%. Let's see if that 271 and change now becomes support in this channel area, because it kind of rides along the bottom of this as well. You get the idea. 271 should be your support intraday from 273.25.